February 19th, 2021. A letter arrives. Decades of business about to end. This letter becomes the center of a $5 billion lawsuit. 5 years later, one president is suing America's biggest bank. Before the lawsuit, there's a bigger question. What does debanking actually mean? Banks are allowed to close accounts they consider a reputational risk. There's no single law that defines it, just a patchwork of guidance banks interpret themselves. In practice, that gray zone has affected far more than one former president. Cannabis businesses, religious organizations, political figures on both sides. Most banking relationships are legally, at will, closable for nearly any reason, or none at all. A generic unnamed risk officer reviews exactly this kind of file every day. So was Trump's closure ordinary business or something else? To answer that, we have to go back further than the letter itself. Trump and his companies had banked with JPMorgan for decades. According to the lawsuit, hundreds of millions of dollars moved through those accounts. A generic account manager reviews the relationship's long paper trail. On January 6, 2021, the U.S. Capitol is stormed by a crowd of Trump supporters. 7 weeks later, JPMorgan sends the closure notice. By April 19th, the accounts are formally closed. The relationship is over. For nearly 5 years, that's where the story stayed. Then, in January 2026, it became a lawsuit. So what does the lawsuit actually claim happened? On January 19th, Trump posts online that he plans to sue within 2 weeks. 3 days later, the complaint is filed in Miami-Dade County, Florida. A generic attorney reviews the complaint before it's filed. The suit seeks at least $5 billion in damages. It accuses the bank of trade libel and breach of good faith, and a violation of Florida's Deceptive and Unfair Trade Practices Act. The complaint also alleges something bigger, a blacklist accessible to federally regulated banks. A generic figure reviews a folder labeled watch list, purely illustrative of the allegation, not a real document. The complaint says the closures came from what it calls the bank's woke beliefs. It's important to say clearly, these are allegations from Trump's own complaint, not proven facts. So what does JPMorgan actually say happened? The bank's answer is direct. It says it doesn't close accounts over politics or religion. JPMC does not close accounts for political or religious reasons, the bank said in a statement. It says closures happen because of legal and regulatory risk, not ideology. A generic bank spokesperson reviews the public statement before it's released. In February 2025, Dimon told Congress the bank doesn't debank people for political beliefs. But he also admitted the rules themselves are onerous and can cause exactly this outcome. The bank has since acknowledged closing dozens of Trump-linked accounts after January 6th. It also says it supports current efforts to address political debanking more broadly. Two sides, two very different explanations for the same 7 weeks in 2021. Then, at Davos in January 2026, something unexpected happens. Asked about his own lawsuit, Trump is quoted saying something surprising. He should not have done it, CNBC reported him saying. It's a strange line to leave hanging over a $5 billion case he himself filed. Whatever it means, the case moves forward regardless. And it's about to run into a very different kind of fight over where it even gets heard. Where a case gets heard can matter as much as what it claims. Trump's lawyers filed in Florida state court, widely seen as more favorable ground. On February 19th, JPMorgan moves to transfer the case to federal court instead. The bank argues Dimon was, in its words, fraudulently included as a defendant. Why? Because Florida's trade practices law exempts federally regulated bank officers acting in their official role. If Dimon is removed as a defendant, the case may have to move to federal court. Different rules, different odds. A generic attorney reviews the transfer motion late into the evening. This isn't a technicality, it's a genuine fight over which court decides the entire case. As of the latest filings, no court has ruled on the merits of either side's claims. But step back from this one case and a much bigger pattern comes into view. This isn't the first time Trump has made this exact claim against a bank. In March 2025, he sued Capital One over more than 300 closed accounts. He's also sued the IRS and Treasury over alleged leaks, seeking $10 billion there. But debanking complaints didn't start with him, and they don't end with him either. Cannabis businesses have lost banking access for years, even in states where it's legal. So have religious organizations and advocacy groups across the political spectrum. A generic small business owner reads a closure notice of her own, a story that's played out thousands of times. In August 2025, an executive order directed regulators to identify unlawful political debanking. The debate over reputational risk now reaches far beyond any one lawsuit, which brings us back to the actual question underneath all of this. As of today, the Trump versus JPMorgan case is still in its early procedural stages. No trial date has been set. No court has ruled on whether the closures were political or simply regulatory caution. Both sides maintain their positions exactly as they stated them on day one. A generic figure closes a laptop, the case file still open on the desk beside it. But the bigger question this case raises doesn't need a verdict to already matter. Reputational risk remains a standard with no clear legal definition. That vagueness is exactly what both critics and defenders of the banking system keep pointing to.
Banks need room to avoid enabling real financial crime. Customers need protection from arbitrary exclusion. Right now, nobody outside a courtroom gets to decide which one of those wins. For a sitting president, that's a strange position to be in. Plaintiff, waiting like anyone else. For JPMorgan, it's a familiar position, defending a decision it says was never about politics at all. Whatever the court eventually decides, the letter that started all of this is already 5 years old. The lawsuit it created is only just beginning. Strip away the politics, and there's a structural question worth sitting with. A handful of banks quietly control most Americans' access to the financial system. When that access gets revoked, the reasons aren't always made public and rarely get challenged in court. This case is one of the rare ones that will actually get tested, publicly, in court. Whatever the outcome, the precedent it sets will reach far beyond one former president. The Senate is already watching debanking as a pattern. This case may become its clearest test. No verdict yet, no trial date, just a 5-year-old letter and a question still being answered. Capitol files will follow this case until it resolves. For now, one thing is already clear. This fight over who controls a bank account is bigger than one lawsuit. And for JPMorgan Chase, this is now the second time in 1 year it's had to answer that question in court.